So that inflation is under control, that's a good thing. Stock market is trading only 1% off the highs. That's a good thing.
Do you think in 2024 we could get in a recession here in the United States?
With all of these things not disastrous, then why are we going to have a recession in 2024?
La situación de la economía está más del lado negativo que positivo. ¿Cómo ven desde el propio Wall Street los expertos el entorno económico y de mercados? Pues estas respuestas las vamos a encontrar en esta entrevista que pude hacer con Peter Tuchman, que es uno de los traders más míticos de la historia de Wall Street, es el más fotografiado. Bueno, la habéis podido ver en numerosas ocasiones y aquí en este propio canal recordad que hace unos meses, en el mes de abril, decía que no veía recesión en Estados Unidos para 2023, que lo veía más improbable y así ha sido. Vamos a ver cómo lo ve a continuación para el próximo 2024, en este año que estrenamos ya, y la situación de las bolsas también. Así que no te pierdas la charla que nos deja unos titularazos realmente increíbles. Hay buenas señales, malas señales. A continuación lo vas a ver.
So we are here again with Peter Tuchman. This is a great moment for me again. Last time that I was here, I asked you about the current environment in economy.
Right.
And you
when was it?
In April.
It was April of 23.
Yeah.
Okay, I'm just trying to remember.
Yeah,
a lot has happened since then.
Yeah, a lot has happened. And you said there is no going to be a recession this year.
I was right.
Yeah, you was
Hey,
right.
I was right. Imagine that.
Yeah, absolutely. But the question moved forward. So,
Okay.
Do you think in 2024 we could get in a recession here in the United States or not?
You know what? I'm not an economist, and I don't know. I'm not clear about the cycles, the way things work. For me, I would have thought that if we were having the problems we were having with inflation, supply chain, interest rate raises, the labor, job market, and all that, all of the things that were contributing to what they thought would make us have a recession in 23, I would think since we now made it through 23, the market has seemed strong, the economy seems okay. We're not, yes, oil is up and down. We do have a huge global political crisis happening. The labor market seems okay. The Federal Reserve is fairly happy with the way they've been able to get a handle on inflation. My understanding of it, and as I said, I'm not an economist, is if we've made it through this year with all of these things not disastrous, then why are we going to have a recession in 2024? I do know enough to know that the cycles are forward-looking, and that once we get ahead of ourselves, that maybe a recession can happen. Look, I don't know. I mean, in my opinion, I don't get that sense. For me, I'm what I call myself a forensic broker. I try and analyze why is the market doing what it's doing. And the market, and I let it tell me the signals. The market is telling me that it's okay with the way things are going. Some companies, more companies than not, are coming up with reasonably good earnings. The labor market, I believe we just had a number the other day that it was the least amount of available jobs that we've seen in a while. Well, that's a good thing to me. So that inflation is under control, that's a good thing. Stock market is trading only 1% off the highs. That's a good thing. So I'm just curious what will make, it's very possible, look, there may be economic cycles and things that I don't know about, because I know I look like Einstein, I'm not that smart, right? But so there's things I don't know, but for me, things seem okay. Is it possible that something will happen? Is there something within the economic cycle that is telling some people that there will be some kind of a recession in 2024? It's possible. It's just not, I don't know that.
Yeah.
I don't understand that part of it.
Yeah, I know. But talking about the stock markets, we rallied this year from October to from today. Do you think 2024 it will be a great year for stock markets, or what's your point about it?
You know what? Look, I try not to think. Thinking can get you in trouble. Having an opinion about the market can get you in trouble. I try and do it one day at a time, a week at a time, to try and see what's going on. This year, I mean, we we try and analyze market movement relative to historic data. I think things have changed so much. We talked about it the last time. Post-COVID, the world is a different place, right? In every respect, the way people respond to each other, the way people respond to business, the amount of new companies that are starting, how much consumer debt is there. I mean, all of the components that make the economy what it is are in a new state of flux, right? We've never been here before, right?
Yeah.
Normally we have a playbook. We understand things, what's happening today relative to what we've seen happen before. But we've never come out of we've never had such 18 months of aggressive interest rate raises. We've never had the amount of stimulus we saw during COVID. We never had a massive global economic shutdown or a pandemic before. So we're in new territory, okay? So this year, look, rarely do you see, so 2020, 2021 were really strong years, obviously due to the stimulus package that really put a lot of fire on the fuel on the fire. Then 2022 came, we were in a state of severe inflation. The tech stocks that took us up during 2021 also are the companies that respond more poorly to raising interest rates, so they took the market down. And as we saw this year, it's possible for one group of very powerful stocks to take a market up and down. So the tech sector took us up in 2021, it took us down in 2022. As we raised interest rates aggressively, the stocks that are most impacted by this interest rate raise is tech. So tech took us up, then tech took us down in 2022. Rarely, I believe, do you see two back-to-back bad years. So we had double-digit negative market in 2022. 2023, the first 7 months were strong. They were powerful. They were good months. And then the market got a little ahead of itself. It was a little fast and furious. Technically, we ran up against some resistance. And so you saw July, there's that level in the S&P 455, I think it is, where we kept trying to break through it and we couldn't. And we saw that sell-off from mid-July until early October. That's okay. You know, markets that are trending up need to pull back to build a foundation. We see it in trading, we see it in markets. So that was healthy. And then there were two scenarios. Was the market going to sell off for the rest of 2023? Or were we going to see it slow down, regroup, and then bounce back? We did see that happen. October, half of October, and all of November. We saw one of the great rallies in November. Tech stocks took us up. We stopped raising interest rates. The labor markets solidified a little bit. And so all things pointed to a stronger market. I don't even need to analyze it. The market went up. It went up because it's more buyers than sellers. It went up for all the reasons we weren't in a recession. It went up because it wasn't going down. I mean, there's all this stuff that's going on. So am I able to predict what 2024 looks like? Unless, look, the world is a crazy place. Obviously, we're in the midst of two wars. We are in also wars that are in regions that affect oil. Oil is a big component to our markets and to our economy.
To inflation,
And to inflation, right? So that could be the wild card. We don't know what's going to happen now in the Middle East, right? Is that going to blow up? Are we going to be in a world war? Well, that will affect everything. So, I mean, there are, look, as things look now, it feels like like Santa Claus will come to town for the next 3 weeks, and we should close out the year in a positive way. Does that mean there'll be follow through in 2024? I don't know. It feels like unless something really bad happens, unless this recession everyone talks about comes to town, unless the world explodes, which is very possible, the market should continue. Now, but anything can happen. We know that. Look, you can see 8 out of 10 things in the economy and the markets be good, and 1 or 2 wild cards that are very strong and powerful can dislocate a rally very quickly. Just like that, right? And that could happen. So.
And market breadth has improved these recent months, and that's good for stock markets.
Market breadth. What do you mean by market breadth? What does that mean to you?
I mean just not the Magnificent Seven Going up.
okay. All right,
just
okay.
the whole market, the Russell 2000, you know, the
100%.
the small caps. This
They are
stage.
starting to. So I think I'm glad you brought that up, because while the fabulous 7 are what took us up from, think about Nvidia in February was 108, it's now 500, right? Microsoft, all these stocks. So yes, that's an important point to know, and I think that will impact 2024.
Yeah.
Because people are the mid cap, the small cap are trying to catch up. People are looking for value. Somebody coming into the market now, is he going to buy Nvidia at $520? Maybe not. But is he going to look for value in the mid cap, small cap? Yes. So I appreciate that point that yes, the breadth is better. Go ahead.
Yeah, and that's why I think that 2024 it could be better for these stocks that are very punished the last year, this year, not last year, this year. And but there are one thing that I have concern about it. It's the VIX. It's in the lowest level that in 2020 maybe.
Okay.
And maybe it could spike next year and maybe create some opportunities to investment. What's your
You know what?
point?
Look. The VIX. I use the VIX as a reactive thing, not as a leading indicator.
Yeah.
For me.
That's
Okay,
it.
so look, the VIX is a fear index. So you're saying that the VIX is trading at a record low over the last number of years means that people are confident that we're not going to be in a recession, that the market is not going to crash. That seems legitimate to me. There's nothing telling me, right, happening right now, whether with earnings and with the economy and with the position and posturing of the Federal Reserve and all that stuff, that we are in trouble. And so therefore, people's fear index is at the low. Now, I believe the market is an indicator that will influence the VIX, and it's not the VIX that will influence the market. So I think you'll start to see the market either go up or go down in a big way before you see the VIX make a move. It's reactive, not proactive, in my opinion.
The estimate said that Federal Reserve make the first cut next year, maybe in the first half or second half. I don't know why. What is the timing or the exactly timing? But what's your opinion about how could affect the first cut to the stock markets?
Okay, so look, we know if you think of economic cycles and you think of interest rate raises and lowering, we've never seen, look, it was a desperate move to fight look, pandemic hits, supply chain issues, the world coming to a close, huge stimulus package, massive inflation, supply chain issues, companies like wondering, well, how do we do this? No playbook for this situation. They start raising interest rates to take money out of the system, right? Out of the money supply system in order to lower inflation. If there's less money in the system, there'll be less spending. We'll be able to curb down prices and we'll get a handle on that. That's their motive.
Yeah.
And it worked, right?
Yeah.
We went from 8.5% inflation to 3%. It was a major move, okay? And some people thought it wouldn't work. It did work. It worked, in fact, quite well. Are still people, yes, in trouble? Yes. Is there a housing crisis? Potentially. There's so many moving parts. I always use the analogy that, you know, as a child, when you're young, you're playing with puzzles, and you have a 250-piece puzzle, 500-piece puzzle. As you get older and smarter and can grow, you have the 1,000-piece puzzle. The world and the market now is a 1,000-piece puzzle. There's so many moving parts that it's almost impossible for me, as somebody who works in this market, to analyze all the moving parts like crazy. So, what was your question?
My question was related with the first cut.
Yes,
to
thank
the
you.
interest
Thank
rates.
you. So look, I think it's been premature that that we are not potentially maybe not even done raising rates, and they're already talking about lowering rates. I think that's premature. We're not sure. They have not said we're done cutting.
Yeah,
they are
that's it.
just saying we're putting it on pause. So why should we already? It's such human nature. It's like if I you know, it's like human beings are very funny people. They're quirky. Like I have a dream to go to one place. The minute I get there, I want to go somewhere else. We're always looking for the next thing, right? It's like, so the minute we stop raising rates, we're going to be lowering rates. We're not convinced yet that we're done raising. So I think it's premature to talk about lowering them. But there is obviously within the market, there is a probability that by the second quarter of next year, Q2, we are going to start lowering rates. Obviously, lowering the rates
It's better
has a positive
for the tech sector, maybe.
It's better for tech. It's better for the markets. Historically, when you lower rates, market goes up. But think about it. Yes, did the market sell off while we were raising them? It did. But you know what? At the end of the day, we have very high rates now, okay? And the market has not responded in a negative fashion. We have raised rates 18 months in a row. All right, and is the market trading at 30,000? No, it's at 35,000. Is the S&P at 4,000? No, it's at 4,500. So even with all this aggressive raising, market is still solid. Now, let's be clear. The economy and the market are two different things. Sometimes they trade together, sometimes they trade differently. But look, I think eventually when we get a handle on inflation and the Federal Reserve is comfortable and people get their footing back and the markets stabilize a little bit, then we will think about lowering rates. When we do, it will once again, as usual, have a positive effect on the market with tech and with the overall market.
And what is your point of view about trading gold? Because gold is in the record and the high record, and so are you positive on gold or some commodities?
You know, my disclaimer: I'm not positive or negative on anything.
Okay.
It's okay. If you own gold, I hope it goes up. If you don't, I hope it goes down. But anyway, for me, I like to analyze why is gold going up? Why is Bitcoin going up? And it's fascinating. Bitcoin came along, cryptocurrency, digital currencies. Still, do I understand it? No. But people's hope was that it would be a hedge against the market. It did not turn out to be that way. Gold, historically, has been a hedge against the market. It is a safe haven asset, right? And what we're seeing is one of the biggest contributing factors to gold's rally, because 3 months ago it was not acting very well. It was at 1,800 or 4 months ago, right? And suddenly now we're at 2,150. It is a direct result of a massive geo-global political crisis, right? When there is world crisis and people have fear of what's going on in the world, they buy gold. It is an asset that's physical. You can hold on to it, and it gives them a sense of security. I think that's the biggest contributing factor for the rally in gold, and I think a bit of the rally in Bitcoin. So I think Bitcoin, while it's very abstract in so many ways, people feel that even though it does not have any inherent value, theoretically, it's what are people willing to pay for it? Right now, people are aggressively willing to pay 40,000. Well, that's okay. So there's a comfort level with that. But I think it's important to note that gold's rally is a direct result of what's happening in the Middle East.
Just maybe two questions to finish the interview. The first question that I wanted to ask you is about the dollar. Do you think the strength of the dollar in 2024 could be more, I don't know how to say, but maybe we have a weak dollar the next year? Or?
You know what? For some reason, I know what I know, and I have. For some reason, I'm very. I can't get a. I don't know anything about the dollar. I don't understand it. I don't understand how it works in relation to goods, pricing of goods, about how it relates inversely to the markets, right? So, how it relates to other currencies. So for some reason, and even though it's the one thing, I know a lot about a lot of things, I'm very comfortable with what I know and what I don't know. Okay. For some reason, every time I try and figure out, because everyone always asks one question about the dollar, and even though I try and teach myself, what is the dollar? Why does it go up and down? How does it relate to markets? I still can't get a handle on it, so I cannot give you an intelligent answer to your question.
Okay, that's great, and that's great. Just tell us one. What are your perfect assets to trade right now? What are you trading right now?
Okay, so it's a good question. I be careful too that I can't really. That would mean someone would infer that I'm recommending some particular asset. I think that right now there are a lot of people sitting on the sidelines with cash. So you're basically asking me look, there's no wrong time to get involved in the stock market. I believe that young people should be investing in themselves, in their future. I believe people should be putting their money to work immediately, right? If you're not in the market yet, start buying some kind of a basket that gives you exposure to the overall market. I can't tell you what that is, but just use your imagination. I mean, it starts with an S, ends with a Y, but, you know, and there's a P in the middle. So, you know, buying an overall index that gives you exposure to the overall market in small increments is a good thing to do to invest in the market. I think we love to buy stuff. You know, when I talk to young people, I tell them invest in stocks and not stuff. We have tons of stuff. I'm sure we have closets full of shoes and phones and all this stuff that we don't need. I want people to really step back and start investing in themselves, in their future, and invest in the stock market. Equities is a great investment. Obviously, gold is a little bit of a slower one. Crypto is a very risky asset.
And fixed income?
I know nothing about fixed income. So you know what? I think put money to work. It's never the wrong time to get involved in the market. Don't put all your eggs in one basket. Diversification is really important. You know, for me, I think I'm a believer in we are very loyal consumers. If you like something, right? If you love Starbucks and you just drink Starbucks all the time, then you must think it's a good product. If it has a good product and it has a good process and a good people, then buy some Starbucks stock. No recommendation. If you like Nike sneakers and you like the sneaker industry because it's a good market and you wear nothing but Nike, okay. If you have an iPhone and you had the iPhone 1, 5, 10, 14, and every time the new one comes out you buy it, then you're an Apple fan. Then maybe instead of buying the iPhone 15, go buy yourself a few shares of Apple stock. So if you like the story and you like the product, maybe you should go out there and buy that stock.
So thank you very much for your answers. It's a pleasure to chat with you. If you could say something to my audience and to Héctor Chamizo.
First of all, I love these two. They're wonderful. And I want, as I just said, I really think it's important. Look, you guys can reach out to me. I tell everybody who reaches out, I will respond to them. I want everybody to really start putting money to work. If you're 18 years old, 20 years old, 30 years old, it doesn't matter. Start investing in stocks and not stuff. We don't need all the stuff that we buy. You know, if you think about it, it is not a get-rich-quick scheme, right? But if you put $100 every month into the stock market, it will grow, right? It's just like a seed. It will grow. Don't worry about it. Put it away, but always be putting whatever you can afford, $5 a month, $10 a month, whatever you can, put it into the market. Historically, markets go up, and that way you'll be able to show you, look, I know everybody likes to look nice and buy all kinds of nice drip and clothes and all that stuff, but you know what, that stuff, the minute you buy it, it goes down in value. So start buying things that potentially could go up.
Thank you very much.
My pleasure.
Thank